Yo, what's going on, guys? Bot Mentality here, and today I want to bring a little bit of different content here for you. I want to go ahead and educate you guys and show you, if you don't already know, and what exactly is the SPY. And I want to go ahead and expand into traditional markets, especially the stock market, as there is so much opportunity there as long as you learn to maintain your risk and continue to extend and develop that bot mentality I talk about so much, eliminating emotions and trading like a machine. What you'll see here is that you can apply technical analysis to any instrument, right? Any different security, any market, whether it be futures, options, forex, trade in the stock market, whatever the underlying item is, and if it has a chart and price action and volume, you can trade it. And so what I want to do is go ahead and jump into traditional markets and explain the SPY and why I'm focused on it and why it's important. Exactly what is it and how can you use it in your trading. So I'm gonna go ahead and jump into that, guys. I hope this helps you. And let's start off right. So the SPY, what is the SPY? The SPDR is the S&P 500 ETF. Okay, that's what they call it, the SPY. So S&P stands for Standard & Poor. The 500 stands for 500 different U.S. companies, so U.S. stocks, and the ETF it stands for Exchange Traded Fund. So the SPY is an exchange traded fund. So what exactly is that? An exchange traded fund essentially diversifies your risk. It's essentially a composition, it's a giant index of 500 different companies is what the SPY is. There's multiple different ETFs out there amongst many different utilities. For example, it could be an ETF that's made for electricity that's composed of multiple different electricity companies. There could be one for water. There could be one for technology companies. There could be one for anything, guys, absolutely anything out there, different utility companies. All an ETF is, an exchange traded fund, is just a single security. It's an average, right? It takes the average, say, price of, in this case, 500 different companies for the SPY, and we'll average it out essentially to one price that you can trade. That's how you should basically look at it. And so it diversifies your risk because you don't have to be worried about trading a single stock and have specific news that relates to that company or earnings drag down your trade just because of you're in that one single stock, right? So for example, in the SPY, if one of the 500 companies declares bankruptcy, you'll see a very small impact here on the price if it were to drop significantly. Whereas if you were just trading options or trading that underlying stock, you would see a huge impact on your trade. Let me give you an example. So recently we had Tesla in the news because Elon Musk decided to smoke weed there on the Joe Rogan podcast. And so you see here on that large red circle, we saw overnight the stock gap down 30 points. So investors essentially lost a lot of money, millions and millions of dollars because of this gap down. Option traders definitely got wrecked if they're on the wrong side of that. Everyone experienced a lot of pain when this gap down, all because Elon Musk thought it was appropriate to smoke weed live on a podcast. So if you were invested in Tesla or you had options in Tesla, you would have seen a drastic change in your profit and loss depending on what side you were on when this happened. And that's very bad. Now, if you traded the SPY, which is composed of 500 different companies, and Tesla within that, if that's what you were trading, instead of seeing a 30-point drop, you might have saw just a couple cents difference reflected here, right? A couple cent drop. So because of the SPY, because of Tesla's only one of the 500 companies, right? It would have a smaller impact on the overall price versus if you traded Tesla. So ETFs, they reduce your risk. That's what I'm trying to say. And so that's what the S&P 500 is, the SPY. It's just an ETF composed of 500 large to mid-cap United States stocks. That's all it is. So it helps diversify your risk. Why am I focused on the SPY? Well, first off, it is the largest ETF in the world, and it trades the most volume in comparison to its price, as you can see right here, every single day. It's highly liquid. It has high liquidity, which means it's easy to get in and out of the stock. There's not going to be a super large gap between the buyers and sellers. So there won't be a buyer. For example, the price here is at $289. There's not going to be a buyer at $289 and a seller at $295. So you have that huge gap in price action where the buyers don't want to move up, the sellers don't want to move down. You're going to essentially have buyers and sellers at every single cent, which is fantastic, guys. You want to make sure you're trading something highly liquid so it's easy to get into a position with as much size as you'd like and easy to get out of a position as well. So that's why I like the SPY. It's highly liquid, it has high liquidity. And you have a low risk of experiencing the volatile events like on normal stocks like Tesla, like I just explained. So what exactly moves the SPY? And I'll go ahead and pull up the chart here for you guys so you can actually see the chart on the SPY, and I'll go to the 1 year mark. So what exactly moves the SPY? So roughly 25% of the SPY is the technology sector. Okay, so here's a composition of the SPY here from Seeking Alpha. You can see just at the time that they made this, the current weightings of each sector. And you can see the largest sector is technology. So you're talking about companies like Facebook, Amazon, Google, Microsoft, Apple. They also control 50% of the actual market cap. So for example, if you were to compare the market cap of these companies, how large these companies are in comparison to the other companies in the SPY, you'll see that these companies are absolutely massive compared to the market caps of other companies. Even though together they only make up 14% as far as the weighted size of the S&P 500, you can see the market cap, these are large companies. So what does that mean? That means these 5 companies, Apple, Amazon, Google, Alphabet, Microsoft Corporation, and Facebook are the ones you should keep the closest eye on, as the tech sector normally leads the SPY. It acts, these companies, if these companies are gapping up, chances are the SPY is gapping up. If these companies are selling off, chances are the SPY is selling off. Now this is not 100%, 100 for 100, 100%, indicator. This isn't all you should use. You should, just because Apple's going up doesn't mean you should all in the SPY, assume the SPY is going up, but it is a good indication that you need to keep in mind these 5 companies because of how large they are compared to the other companies and because of their significance in our culture. So make sure if you're charting the SPY, keep a chart up on these 5 companies as well, and you'll start to see the correlations there that can be traded off of. And then, of course, the technology sector is the first largest, and second after that comes the financial sector. So just so you can understand how the SPY is composed and the sort of distribution of the different types of companies within the SPY. So now you know what moves the SPY. You want to keep an eye on the technology sector, the financial sector. You want to keep an eye on Facebook, Amazon, Google, Microsoft, and Apple. And the last thing that moves the SPY is you want to keep an eye on the overall, macro conditions of the world. So you want to look at, for example, the big thing that's been in talks right now is the trade wars. Trump wants to impose tariffs on China goods, etc. Those sort of headlines, everything from hurricanes to, national tragedies, those all impact the market. So I recommend, whichever news feed you'd like the most, keep an eye on that. Make sure you're keeping an ear out, and not necessarily, don't take trade ideas from that, but you can understand the mood of the market by these sort of headlines that come out that I'm sure you already know about and you hear about in day-to-day life. If you watch CNN, you'll hear about essentially everything that's going to move the market. They'll tell you. But the main thing recently has been like the trade wars, and that helps move the S&P 500. So now you know what the S&P 500 is. You know why I like it, because of the high volume, high liquidity. There's a high distribution, because the distribution of companies, there's a low risk of, manipulation amongst one stock. It won't lower the entire thing. It diversifies risk, essentially. Spent that whole time just trying to say that. And what moves the SPY. You want to look at the leading companies there that I spoke about earlier, and you want to keep an eye on the overall, what's going on in the world, the overall impact, especially of what the United States is doing, because these are United States companies. So that's my beginner's breakdown of the SPY and what I like about it, and I'll talk about in future videos why I'm actually trading it and how I'm trading it. So I hope this helped you guys out. I really appreciate you watching this video. If you have any other questions, need me to explain something a little bit better, or go into detail on something else in a future video, go ahead and leave a comment in the description box, or the comment section below. I always say description box. And if you're interested in joining my private chat room, have information about that on my Patreon. I also have a daily newsletter where I send out technical analysis on the SPY and on many other securities as well, especially cryptocurrencies. Love some Bitcoin. And that's it. Yeah, follow me on Twitter. If you have any questions, you can message me there. You can shoot me an email, guys. All that information is in the description box below. I'm going to go ahead and get out of here. You guys have a great rest of your day. Continue to develop that bot mentality by controlling your emotions and learning to trade like a machine. I'm out of here, guys. Deuces.